Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hiral Tatia. Senco Gold, that is one of the companies we are looking at today on the back of earnings. Clearly, you have the revenue as well as the profit that has beat estimates. EBITDA margins have come in line as well. Plus, you have Diwali, the festive season, which is ongoing, which is one of the key drivers for gold companies as well. And you have with the wedding season, which is just around the corner. To discuss more, Suvankar Sen, MD and CEO, as well as Sanjay Banka, CFO at Senco Gold, joins in. Good morning and welcome to the show, gentlemen, and wishing you and the team a happy Diwali and a prosperous New Year.
Thank
Good
you
morning.
very much, and wishing you and your team a wonderful Diwali and a new year. Great. Look forward for a great year ahead.
Absolutely. Thank you so much. Firstly, let's start with the numbers. Clearly, a beat in terms of revenue as well as the profitability is what we've seen from a consensus basis. How has the quarter been according to you, Suvankar? Has it met your internal expectations?
So yes, it's been a very encouraging quarter, the Q2, especially with the Adhik Maas, which is not really the season for the jewelry industry. But in spite of that, we've seen a larger one amount of interest in terms of the consumer buying behavior. And the most important part is that if we look at the growth for gold jewelry is there. But diamond jewelry growth we have seen as at about 34% in terms of volume and close to 50% in terms of value, which means that with the increase in gold prices, consumers are looking to buy jewelry to adorn themselves. But they are okay and open to the idea of adopting to modern designs and modern jewelry. It is not only the traditional gold jewelry, and overall the sales of diamond jewelry that we see at a higher growth than gold jewelry will in the long run add to a higher margin in terms of the bottom line for the company. So that is a very good sign that we are seeing, and overall in the growth of the industry, I think that will help overall for a greater future.
Right. So, with this kind of growth rate, around 1146 odd crores is what we've done in the second quarter. Say around 4.5 to 5,000 odd crores in terms of FY24 as a year is what the company plans to achieve, or do you think it'll be better than that?
No, I'll tell you what. Last year we did about 4,200 odd crores, and we have been guiding with a very conservative approach. That's been the focus of our management. That we will guide in a conservative manner and try to achieve higher than that. So we are looking. If you look at the last 3 years, 5 years CAGR growth, we've been growing in the range of 18 to 20%, and that is the kind of guidance we would like to give you on top of the base of 4,000. 200 to 4,300 crores of turnover that we had. So that is how is what we are expecting.
Okay. Where is the growth coming from, and where is this? I mean, what is it that is going to be the key positive trigger?
So one important trigger that we see is that in the last year, our semi-rural, semi-urban, or rural markets, which is basically through the franchisee stores that we have in the tier 2, 3, 4 cities, they haven't been doing that well. Last year, we saw a growth of a very marginal 2, 3%. But this year, those markets have been doing well. We've seen a growth of about 14 to 15%. So that is one of the triggering points in which we feel that will drive the growth. And overall, if we look at the number of stores today, we are currently crossing 150 stores. As we speak to you, we have 153 stores. So we've added almost 16 to 17 new stores to the company's list. And that is where we have, and with this 16 to 17 new stores, if we analyze the H1 like-to-like growth, you'll be happy to know that is also in the range of almost 14 to 15%. So it's a combination of the existing stores, the new stores, the franchisee network doing well. I think all put together, and with the wedding season in the coming 2 to 3 months, we have, as per the data that we have in the market, about 35 lakh weddings. Now that will be distributed amongst the industry overall, but these will be the triggers that will lead to a higher sales for the industry.
Okay. So, taking this into consideration, if you have to look at the third quarter as well, with the wedding season, as well as you have Diwali, which has fallen into the third season as well this time around. Is the third quarter expected to be the best out of the four?
See, historically, in terms of the overall absolute numbers, we have always seen that the third quarter does the best performance, and that is that we've seen over the last 5 years, 10 years. So that's a fact. The second part to look at is the growth. So while the H1, which has a lower base compared to the third quarter, has seen a growth of almost 26 to 28%. The third quarter with a higher base, we are looking at a value growth of 15 to 18%. And that's based on the fact that we've seen the Dhanteras season, and we've seen that in this Dhanteras season, we've seen a growth of 12 to 15% approximately growth in terms of value. In terms of volume, the growth has been lower because last year Dhanteras the gold rates were at about 5,200. Today the gold rates are at about 6,000 rupees. So for the budget of the consumers, that grows, but that doesn't grow to the extent and the way which the gold prices have grown. So overall, we would be looking at a third quarter with a growth of about 15 to 18%, and that's how let's see how it all goes.
Right. So when we've seen the revenue grow by 26% this quarter, has it been a gold price led increase, or has it been a volume or a volume based increase?
No, it's a combination of both. It's a combination of both. In H1, we have seen that the volume have increased by about 7 to 8%, while in value terms, it has increased to above 25, 26% that we are talking about. And along with the gold price and the gold value increase, the diamond jewelry increase has been, our studded share of diamond jewelry that has also gone up from say 10.9% the previous year to almost close to 12% as the studded share on the overall sales, and the growth of almost 45 to 50% in terms of value. So that is how we've seen that the value growth has been higher, the volume growth has been lower.
Right. Sanjay, coming to you as well in terms of revenue per store, that's around 33 crores currently. Do you see that increasing going ahead? And if so, what's the kind of benchmark you're working with?
So, as you have said earlier, we see a huge opportunity in revenue per store. So, there are some stores, we have got Bhagavati store, we have got Maulali store near the airport. They are crossing more than 100 crore. In fact, a store in Dwarka, it has also crossed 60 crores. So, we are very confident that there is huge potential and opportunity. And this 33 crore which you are seeing, it's a blended of own store and franchisee store. And this number varies across various zones. So we see more than 2x opportunity in doubling the per store revenue, and that's what is our future. So when we say that our CAGR has been 20% per annum, and this year we have grown 29% in Q1 and 26% in Q2. So that is the direction we see next 4 to 5 years time.
Okay.
In
And
fact, in the current year also, this growth which you are saying, the same store sales growth, out of this 26% growth, 19% has come from the existing stores, which we call like for like growth or same store sales growth. So the message is that the existing stores continue to grow.
right. With this, from a region specific perspective, you still have majority of the revenues coming in from the West. What's the expansion plan specifically with regards to North and East, and how much will they be able to contribute in the next 12 to 18 months?
So, our majority of the stores are in the east. While the state is called West Bengal, it is in the eastern part of the country. So, majority of our stores are in the eastern part of the country and northern part of the country. And strategically, being headquartered in the eastern part of the country, we would like to penetrate deeper and deeper into the eastern and the northern part of the country. And 70 to 80% of the new stores that we will be coming up with will be in the eastern and northern part of the country. Only 15-20% of the stores will be in the southern and the western part of the country.
Right. Overall, from price perspective, Sanjay, how are you expecting gold prices to move from here on?
See, if you read the various reports of experts, they are talking about $2,400 per ounce. So clearly, gold is a very precious asset. While in the short term, we have seen even versus last year Q1 and Q2, the prices have increased by almost 17 to 18%. So while short term it will be range bound, but long term, gold as an investment class continue to be a very superior asset, and we see gold appreciating in long term based upon the various reports which we are seeing, and that's what is the penchant for the Indian household and Indian customers. And even if you see, even the central banks across the globe, they have realized this trend, and a major part of the around 15% of the total gold mined every year, it is going to the central bank. So that trend is expected to continue with a long-term upside move.
Right. So that's the view coming in overall. Thank you, Sanjay. Thank you, Suvankar, for joining us on the show and sharing the views. And this is one of the best times with regards to where jewelers are concerned. So that's the management of Senco, clearly with the revenue profit that has beat street estimates. But moving on, Patel Engineering, that's another one we have been watching out for. Lots brewing with Patel Engineering as well with regards to where earnings are concerned. Let's quickly, if you see the stock overall as well, good growth coming in on that front. You've seen the revenues, which have seen a growth of around 23%. Profits have jumped 63%, and that's the second quarter numbers. Again, if you see in the first half as well, the uptick has been pretty strong, and the order book position would stand at around 20,000 odd crores. In fact, they are starting work on India's largest Dibang Hydro project in Arunachal Pradesh as well. To discuss more on the same, joining us on the show is Kavita Shirvaikar, CFO and Wholetime Director. Kavita, firstly, good morning and welcome to the show, and wishing you a happy Diwali and a prosperous New Year.
A very happy Diwali and prosperous New Year.
Thank you so much. Kavita, clearly good growth that we've seen in the second quarter. First half has been strong. Will the second half mirror what we've seen in the first half?
See, normally if you see, we are into construction. The first half is bit lower on the lower side, and second half is bit on the higher side. So we expect to continue to maintain this kind of growth.
Okay.
In
Yeah, go ahead.
So in Q3, Q4 also, we expect to maintain this kind of growth as we have a strong order book, which is around 20,000 crore.
Got it. If you see from the historical perspective as well, revenues in terms of FY23 was around 3,890 odd crores. Clearly, with the way the quarter is looking like, it seems the company will easily cross the 4,000 crore mark this time around. What's the CAGR growth that you're expecting in terms of top line and profitability?
So we had given the target of around 15 to 20% growth in revenue. So we expect to achieve the same. Right now, first, if you see half year, we have achieved around growth of 23%. And next half also, we expect to achieve around 20% growth.
Okay. You're going to start work on one of the projects as well from the hydrospace. What is the timeline looking like? And secondly, will you see any revenue contribution from there, in FY24?
So we received LOA in Q1. We expect, because this is a large hydropower project, so which will take 6 to 12 months time for mobilization. We expect this project will contribute to the revenue and profitability from the next financial year onwards.
Okay. Apart from this, do you see the revenue mix changing in any fashion? Taking hydro still is 49%. Irrigation, tunnel, road, are you expecting that change happen?
See, it depends on the more or less it will remain on the same line because see, we see huge opportunity available in the hydro sector. Like as India target net zero emission by 2070 and 50% of power from renewable sources. So by 2030 target to complete 27 gigawatt. Further, there is a huge opportunity available in pump storage power projects. So we see same kind of order inflow in near future terms. Around 2 lakh crore worth opportunity available in hydro sector. Even irrigation also around 90,000 crore worth opportunity available. because of Pradhan Mantri Krishi Yojana scheme, where the outlay is expected around more than 90,000 crore. So we see more or less our order book will remain in these kind of percentage. But yeah, it depends on the timing and announcement of the projects.
Okay, so would it be right to say that the future earnings of the company will be primarily driven by hydropower as well as irrigation projects, which do offer higher margins, and the government is also aligned with these sectors?
Yeah, yeah, it's true.
And from an order book perspective, it stands at around 20,000 odd crores currently. Uh, Going into FY25, where do you see it? Do you see probably a growth of almost 35 to 40% coming in there on the order book?
By FY25, see, we expect some large projects coming up for the bidding. If you know, recently Arunachal Pradesh government has signed a MOU with the various PSUs like NHPC, NIPCO, NIPCO and SJVNL for development of 11,500 megawatt, which will also come up for the bidding in near future. So we see some of the large projects coming up for bidding in next financial year. So our order book definitely we expect to grow around 15 to 20% year on year basis, and our revenue also we expect to grow around 15 to 20% year on year basis.
Okay. Kavita, from a debt reduction perspective, from 5,300 crores, you've already gone down to 1,700. Sale of non-core assets, settling arbitration awards is what we've already seen. Uh, to how much is the plan to reduce the debt to, number one, and what's the comfortable level?
See, as of now, our consolidated debt is around 2,000 crore. If you see absolute terms, you will feel it is an increase, but it is not an increase in the totality terms. If you see, last Q1, we replaced high cost contractee advance because normally we take avail advances from the client for mobilization and for equipment, deployment of equipment for the projects. So last Q1, we replaced around 250 crore debt, which was at the higher interest cost. We replaced with a debt which will be having the saving of 4 to 5% in interest rate. If you see, our interest cost has reduced. Last year it was around last quarter, corresponding last quarter, it was around 100 crore. Now it has reduced to around 90 crores. So quarter on quarter, we are getting saving of 10 crores as compared to last year. So our debt, this year we had given the target of reduction of debt in totality of around 200 crore. Q1, we have already, if you add a contractee advance plus debt, put together, we have reduced around 100 crores during first half.
Right. So that's going to be a trajectory we should be watching out for as well. Thank you, Kavita, so much for joining us on the show and sharing the views. So that's the management of Patel Engineering. Good order book is what the company's key benefit is, and the sectors which are high margin sectors is where they are concentrating on. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.